So this is an example of a multi-step income statement. Single-step income statements just combine all revenues together, all expenses together, and then take a tax expense based on all the revenues being added together, summed up as one line item, all the expenses added together, summed up as one line item. You take the difference between those two, you have pre-tax income. Take tax expense, you have net income. So this is a more evolved, more functional sort of income statement based on the usefulness of the income statement, which is to give us an idea of persistence. I'm going to break it into first two large designations up here above the line items. So when we talk about above the line versus below the line, which is something you'll hear commonly in reference to an income statement's organization, the line becomes tax expense. So this is where taxes are taken out. Everything up here is going to be above the line or above the line items. And then down here, we have below the line items, most notably net income and discontinued operations. We're going to expand that as we learn about other comprehensive income and comprehensive income. But for now, all we need to worry about is above the line and below the line here. There used to be more items below the line, but those have been eliminated by changes in the FASB's codification. Now, between above the line and below the line, we have sometimes more up here, but we have a couple of other small sections. Anything from net sales through operating expenses is going to be operations or operating items. Then after we have income from operations, which is just the aggregation of all these items up here, we disclose our non-operating income. So let's think about those terms real quickly. Operating income would be those things that result from the ongoing central operations of the company. Those are our activities that we undertake regularly to generate profits. Our non-operating items are things that are outside of company operations. So this could include some items that are related to financing and investing activities. That's going to be a lot of what you see down here. You're also going to see some items that are just transient or not recurring items put here. Obviously, already we're getting an idea of persistence, because if something is related to the central and ongoing operations, how the company basically and at the core of its purpose creates income, it's going to be up here. And if it just happens to be a little more a little bit more transitory or incidental, then it's going to be placed in the non-operating section. There's some little pieces here throughout. I suggest that when you're looking at the next page of notes and study, that you kind of reference this. I'm not going to go through every single one of these, but I will just kind of comment about how, selling general and administrative expenses, obviously that's at the core of operations. Then there's a few items. One, of course, that you're familiar with, depreciation and amortization. These other three that you're not so familiar with, maybe, we'll talk a little bit more about on the next page. But if you look briefly at these, interest revenue, dividend revenue, interest expense, unrealized holding gains on trading securities, unrealized holding losses on trading securities. I just have these broken out in positive and negative effects to income. So we either have revenues and gains or we have expenses and losses. However, that's just an arbitrary separation. One of the things I do want to address briefly, when you see dividend revenue, this is not dividends paid by the company. This is dividends paid to the company. For equity, securities, it holds from other companies. So this is not the dividends I pay my shareholders, which are not included on an income statement. That's a huge distinction. If I pay my shareholders dividends, that is not a subtraction from the income statement. However, if my company holds equity stock of another company and that company pays dividends to its shareholders, well, since my company is the shareholder of this other company, it does receive dividend revenue. But other than that, we'll get into some of these a little bit more in the following pages. After we get both operating and non-operating, we have income before taxes. We apply a tax rate to get tax expense. And then we have one of two things happen. If we don't have any discontinued operations, then we simply have net income. If we do have discontinued operations, this piece here becomes income before discontinued operations. Now, a discontinued operation, and again, we'll describe this more in a bit, but it's just a part of the company, a component of the company that is no longer intended to be kept. So, for example, in your practice problem, you have the company deciding that it's no longer going to do its car restoration operations. It's still going to do repairs, but it's divesting itself of any of the components, any of the assets and the liabilities of the piece of the company that deals with car restorations. And that's a strategic shift in how the company is going to operate. It's giving up one of its lines of business in a way, and therefore it will no longer affect future profitability of the company. That's why we put the discontinued operations section so far down the income statement. In fact, it's one of the very last things, because we don't expect it to have very much persistence. Finally, on every income statement, this is a required disclosure. We have to have EPS figures, and we need only one. If we have no discontinued operations, then we just need net income, this one down here. But if there are discontinued operations, then we have three. And notice that these will derive from the final three items here. We have this item. If we have discontinued operations, this is income from continuing operations. Then that becomes the numerator there. Again, hypothesizing that we have a discontinued operation. Then we have the effect of discontinued operations placed here in this numerator for the discontinued operations effect, EPS. And then finally, we have net income, which makes up the numerator in this final EPS item. If we don't have any discontinued operations, then this subtotal is net income. There's nothing to report here because there's no discontinued operations. So that's the only one that we need to present to shareholders, and it would be this one down here.